Yo, it's good. So this will be a very quick one about this strategy. I might just send you on DM as a PDF file, but there are some very important things missing in the PDF file, which I would like to explain in this video. So the first thing is, you might have just noticed that the strategy is not something too crazy and like, not something you never heard of before. But the crazy thing is the execution, in my opinion, and you're like, I'm going to show you. But in general, like, it's not something you've never heard of, and like, it's similar to some entry models you might have already seen on TikTok or on YouTube. But I'm saying it all the time. I said it on YouTube as well, that it's not like your trading profitability is not really depending only on the strategy. More it is depending on what you do with that strategy, and if you have the right psychology, and if you stay consistent. Okay, so the strategy is just, you could use any strategy which is performing good. And I just think that I have packed up my strategy very good because it has only two main confluences, but I just use it like in a very different way. I haven't seen this way of using, in my opinion, to be honest. And it's just very, like, very unique entry and execution, which is also hard to master. That's why you're supposed to, like, you just got the strategy, okay, and you watch this video. You're supposed to back test the strategy first, then forward test it on demo. And if you're doing good on demo, like, test it around at least 1 month on demo. And if you're doing good profits and you're like improving, then you could start off with a funded account to test it on there, and then you should be good. But yeah, let's just get to the strategy, okay? So you've probably seen already in the PDF file, it's just only 50-minute sweep and 1 minute entry, 1 minute fair value gap entry. But like, you're using the strategy and you're learning how to use it. And the main thing is, it's not really even about the strategy, as I said, because now I am using my market knowledge and market experience to trade. Okay, I'm not even using the fixed strategy. The strategy is for you to learn this concept and this idea of liquidity sweep and scalping on a small time frame. So then, like, when you mastered this 50-minute liquidity sweep and 1 minute entry, then later you can be flexible with the time frames. For example, 5-minute liquidity sweep, 1 minute entry, 30-minute liquidity sweep, 3-minute entry, and so on. Like, you see, it's just not even the fixed strategy, and copy it and use it all the time. Because it really, like, the market won't give you the same pattern all the time. It's just, it will be a bit different to the last times. So you got to adapt to the market. The market won't adapt to you. So it's just, okay, let's just say this is the 50-minute sweep. First of all, you don't want to, like, you really want to look for a good sweep, okay? And this, in my opinion, would be a good sweep. And if you're struggling with liquidity sweeps, then just watch the video in the exclusive videos. I hope you watched the one in the Road to Glory already, but you can watch in the exclusive videos for how to really, like, define, I don't know, like, I think it's named How to Really Define Liquidity Sweeps. And it's just basically telling you that how a good liquidity sweep looks like. So a very quick sweep, a change, okay? And this change, you want to zoom in on the 1 minute time frame and look for a fair value gap within this area, okay? You want to look for a fair value gap entry within this area. The first thing which you have to really watch out for, I can show it to you on chart in a minute as well. So let's say you're now on the 1 minute time frame. Okay, you saw this on the 50 minute, you're looking for a short, you saw this liquidity, this sweep, and in this green area now you see the fair value gap. Okay, so let's just say this is the fair value gap. Okay, and you mark it out. Okay, so this marked out is the fair value gap. This is somewhere the sweep, like the line is a sweep because you used a trend line. So this is the fair value gap. Okay, now you're waiting for price to get into that fair value gap, and there are rules in the PDF file which are actually important because you don't want a too big fair value gap or a fair value gap which is too far away from that sweep or too late. So there are some things you gotta figure out, and of course you can get help in the Discord always. And don't forget to watch trade ideas and the wins, because there you will see like good setups which we used. So you want price to get into that fair value gap. Very important now. Pay attention. Price comes into that fair value gap, and now you don't enter immediately when it taps into that. You wait for a reaction. That's very important. That will skyrocket your win rate. So if you wait for a good reaction, okay, you don't want a wick, just like you don't want to wick off that fair value gap. You want a good reaction. What do I mean by a good reaction? Price coming out and showing selling pressure because you're looking for a short. Okay, you're looking for selling pressure, and let's say now you see price aggressively moving to the downside. Okay, and then here you can enter your trade. Here you can enter your trade. Let's say this is your take profit, then there's your entry on the arrow. And you can, where you place your stop loss now is if the fair value gap got respected and reacted off, then you can place your stop loss above the fair value gap reaction. So this was the reaction high, and you place it above. I will show you some chart examples in a bit as well, but this is just very important to know first. Okay, so this is kind of it, how you enter, and then it should be very good because the probability of this trade has gone up. And the same you do with short as well. Sell side liquidity sweep, you want to see a bullish fair value gap. Okay, you want to see it immediately after the sweep. Watch out for the rules on the PDF file. Now I'm going to show you some examples on the chart. Okay. Okay, so here you can see it's not an A plus setup, so you're supposed to look for an A plus setup, but that's the only one I could find now. You see a very nice liquidity created. Okay, you also have to have knowledge about liquidity, not only the sweep but liquidity in general. So you have to be able to recognize good liquidity. Okay, so this is on the 1 minute time frame, but on the 50-minute time frame it was good liquidity, a good standing out liquidity. Okay, you mark it out like this, you wait for a sweep of that, and then you get a very nice sweep of that. The sweep is also very good looking, so good liquidity, good sweep, plus points for our setup. And then you see a fair value gap which is not created immediately after the sweep, but still is okay. Okay, so then you see selling pressure, create like a displacement, you see the fair value gap created, and then you see a tap into that fair value gap. And when did I enter? I enter after a reaction off of that. Okay, you don't want price to chill around too long into that fair value gap. So you really want to see like that's 1, 2, 3 candles to react with that. One candle is always the best when one candle only goes into that and reacts, but this is still okay. As I said, it's not the A plus setup, because the A plus setup is when every confluence, like the liquidity, how it's looking, the sweep, the fair value gap, the reaction of the fair value gap, and market condition like price action when everything is looking good. Okay, so here you can see I entered when it was showing buying selling pressure in that case. So it was going down, you enter on here, you see where I place my stop loss, because that's like kind of the difference. Okay, one single little adjustment of some random ICT strategy or whatever's your favorite strategy from some social media guy, it's just where you place your stop loss, where you place your take profit, and when you enter. I don't know if you ever seen that entry model when you enter after fair value gap reaction and place your stop loss above the fair value gap, but it seems like I don't want to say that I'm the only one doing it, because trading industry is very, very big and probably there are some people out there doing it too, but it's high level scalping. I'm doing it for a long time, and you see the people in the Discord are eating, and I've been eating for weeks now. I had my first loss in like 2 weeks yesterday. Okay, and the day before I had 2 wins. So I'm doing very well with that strategy. Where you want to put your stop loss, I already told you, like above the fair value gap if the reaction is good. Where you want to put your GP is you just look for lows. When you're shorting, you look for lows to target. Not too big TP. Just look for around 1 to 2 risk to reward. At least 1 to 2. Around like 1 to 2.5 or something, and then you should be good. In this case, it was, what was in this case? In this case, it was 1 to 2.2, which worked out pretty good. You see, sometimes you don't get the biggest move reaction off the fair value gap, so that's why you don't want to overdo it, because you don't want to target this and just force risk reward. Okay, so look for a solid risk reward like around 1 to 2. So that was kind of it. Also, just I had this example one time in my Road to Glory video, but it's very important for you like to understand it. Okay, if I'm using ICT, let's say just some like a lot of people said this is similar to Silver Bullet, and I'm going to tell you now why it's not the same as Silver Bullet, even though it looks similar. Okay, why is it not the same? Because the Silver Bullet is, I don't know, 5-minute or 50-minute liquidity sweeps and executing on the same time frame. So I think it was a 5-minute liquidity sweep executing from on the 5-minute time frame, which is the first difference, because we don't even execute on the 5-minute, which is a big difference. It doesn't sound like a big difference, but it is. And the second difference is that the Silver Bullet is used in 1 Silver Bullet hour, which doesn't even make sense to me, because you see, this was at after New York session open, but like I don't know about time-based models. Like, why would there be 1 hour in that day, the Silver Bullet hour? I don't know why you even have to give that a fancy name, but why would there be 1 hour in the whole day where it's supposed to work? Bro, like, you dead ass? And yeah, the time-based, let's say this strategy, let's say even this, not even the Silver Bullet. Let's say you use my strategy only 1 hour a day, because you say it's a Glory Trades hour for the strategy. Glory Trades strategy hour from 5 to 6 p.m. Use it only then. Bro, of course your win rate, and you're probably not even getting setups. So you see, you're going to miss on a lot of wins and on some losses as well. You're going to miss on trading in general. So you don't like. It's just, and also, some people use the similar strategy to that, like liquidity sweeps and fair value gap, and they say, oh, I use the same strategy. No, you don't, because you are entering on the fair value gap instantly when you don't even know the fair value gap is going to get respected or not. So price might just do this and this, and your stop loss is over here, and you enter right on the fair value gap, and your risk reward is kind of weird as well, but let's just let that fact out. So your chance of getting stopped is much higher than mine, because I'm waiting for a fair value gap reaction, okay? First of all. And some people, like, that's a different enough, that's difference enough to say that's not the same strategy as mine. And another difference is time frames. So I'm using, for the strategy, like for teaching you, 50-minute and 1 minute. But also I'm not, like, now I am very experienced, and when you get experience with that, then as I said, you can be flexible with the time frames too. So this is not even copy and pasting the strategy on one time frame, on one or two time frames for all my life. You will be flexible. So it's not even a really really a strategy, it's a system. You get a whole system from me, a tested system, which is working. Okay, you can back test it, bro. Like, and also every Sunday I'm doing live trader recaps of the week, and also showing you which trades I took. So you see my loss of yesterday, you would see the wins of like the day before. So I'm literally showing you proof every day. Like when I take trades, I'm sending it in, and I'm showing you proof that it is still working. Okay, so yeah. In the end, like I said it one time in the live session or something, I don't care. Okay, if you don't want to be in my Discord, or don't want to learn my strategy because, I don't know, for some reason, because you think it's a copy of ICT or something, then bro, then use ICT or use whatever you want. Like, I don't give a fuck. It's just, I am making money with trading. Okay, I'm being profitable, and I'm helping other people to get profitable, even for free on YouTube. And I'm only charging it because I want serious people in my Discord, okay? As a community, helping each other. So if you want to make money with me, join me, and I'm going to teach you, and you're going to make money as well when you're mastering this. But if you don't, or if you want to make it with someone else, then do it, okay? I don't care. Like, I'm good, okay? So yeah, man. I'm not telling you some dream. I already told you. It's going to take us time. You have to really want it. You have to really want it bad, and you have to invest a lot of time in that. But yeah, that was kind of it with the video. If you have any questions, then use the chat room. Don't DM me in private, because I probably won't see it. Your DMs probably will go down because I got a lot of DMs. So yeah, man. Good luck for your trading.